deficiency judgment in order to attempt to recover that deficiency. It's a completely separate case that would have to be filed with the courts, and the court would have to approve the bank to try and collect that deficiency. Now in Florida, we are a deficiency right state, meaning that the bank does have the ability to attach itself to your checking accounts, your income, and or other assets in order to attempt to collect that deficiency. They don't have the ability to come after certain retirement accounts such as 401ks, IRAs, Social Security, maybe unemployment benefits, but it's definitely something you'll want to speak with your accountant and or attorney. So you can see that foreclosure is the worst case scenario for all parties. Now let's move on to the short sale. In order to do a short sale, we need to express to the lender two things. One, that the home is no longer worth what's owed on it, and that the owner is no longer able to afford the home. When we do a short sale, we're trying to do three things up front. One is delay the sheriff sale or the foreclosure. Two is trigger the bank to do an interior BPO to help establish their current market value. The third thing is have the ability to negotiate a settlement price as well as the potential ramifications that may apply. In order to do a short sale, the lender requires a few things: a hardship package, a contract, and a settlement statement. Just as when you applied to purchase the home, you had to give a certain amount of information, well, now we're going to need to collect some more of that information to apply to get out of the loan. The first thing that we're going to need is an authorization to release information. The second thing we're going to need is a hardship letter, basically explaining how you got into this situation, whether it be through work-related, job loss, income, health reasons, divorce, anything and everything that applies. The more explanation, the better. The third thing we'll need is a general financial statement. This statement is basically all of your monthly expenses versus what your income is, to show what your debt to income is and show that you can no longer afford the property. Some of the other things you'll need are just copies. I will not need the originals, but it's going to be the last 2 months of your current everyday checking account, your last 2 years of your tax returns. If they're not current or you filed an extension, we'll need a copy of those extensions as well as the W-2s and or 1099s. We'll also need the last 2 months of your pay stubs. If you're self-employed, a profit and loss, Social Security and or unemployment. A lot of people get those direct deposited, so we'll be able to verify those. We'll just need the letters of